Alright, good morning then everyone, as we have a quick look back to the Fed last night and a look forward into today's central bank decisions, which were in the middle of a bunch of different central banks in the kind of, as you'd imagine, the last full trading week for a lot of people. Obviously next week we'll trade, but I think towards the end of next week, Thursday, Friday next week, it certainly will start to wind down in the days leading up to Christmas. But we'll have a look back to the Fed yesterday, and a pretty dovish stance took by Jerome Powell yesterday. If you watched that video, and yesterday, it's kind of what we predicted, to be honest. Looking towards the analysis we did into this yesterday. We had a look at the dot plot yesterday. Now, dot plot has been revised lower. We said by year end 2023 it would be revised lower, as we did not get the hike that they had initially told us we might get in September. Therefore, some market participants thought that the move lower in obviously end of 2023 that would come, but then they would leave rate expectations for next year unchanged. But we were looking at that thinking, if they stepped, so they had it open to one more hike into year end this year, plus then 3 cuts into next year, right? So market participants thought they would leave it as revised this year's lower, then leave 2 cuts on the table for next year, but they just revised all of them down lower. So 3 cuts still on the table is what the Fed have told us into next week. They've said that they're done with interest rate hikes, and the next move from the Fed is going to be a cut, or that's certainly what they did allude to. Markets pricing a little bit more than what the Fed told us from yesterday, but certainly, Jerome Powell had a couple of different opportunities, certainly within his press conference, to push back on this, and he declined to push back on it. So they're pretty open to 3 interest rate cuts for next year. When we get them is a different question. Bets have ramped up for a March cut, a May cut. Cuts are being priced in at nearly every meeting next year. I mean, we're not going to get that. Obviously, you can see markets here down pricing 3.75% interest rate, which is this little red dot on the on the screen you can see here. But the median projection is these blue dots, which sit 75 basis points lower than we are now, which is then where you get your 3 cuts from. Where we end up come year end next year is obviously anyone's guess. The economic data needs to unfold. We need to see how that goes over the next number of months. But they did note that although growth has somewhat slowed and inflation is now under control, there is still a bit of work to be done, but ultimately they're at the end of the hiking cycle, and that's kind of green light ahead for stocks to push higher. It seems all rosy. The soft landing has nearly been achieved. Growth is still okay, the labour market is still okay, they've got inflation under control, net worth in US households is at record highs. So it seems great, but personally, I struggle to believe you can go from 0.25% interest rate to a 5.5% interest rate in a space of a couple of years and have no widespread implications off the back of it. But anyway, that's a conversation for another day. For now, growth is still okay, labour market's still okay, inflation's under control, interest rate, next move from an interest rate is likely to be lower. It kind of gives you the green light to go ahead on markets. You can see equity markets enjoying themselves. Certainly the US side of things. You can see the S&P, the Dow Jones, the Nasdaq, the Russell all higher aggressively off the back of that yesterday. You can see the dollar aggressively lower. Aussie, Kiwi, Euro, and Sterling all pushing lower. Dollar Swiss, dollar CAD, dollar yen all pushing lower. Then obviously your dollar index follows suit. You can see yields lower aggressively yesterday, and that's continued on into this morning. So you expected reaction to a dovish meeting, and he just seemed reluctant to give any sort of a hawkish stance from yesterday. So it seems like as if the green light is being given for that for those moves to continue. Where that may get troublesome though today is the Bank of England and the ECB. Now, slightly different outlooks for the ECB and the Bank of England. Right, we'll come to the Bank of England first, as that is 12 o'clock. But you can see here the Monetary Policy Committee members in the previous meeting. 3 out of 9 voted for a hike, 6 out of 9 voted for unchanged. Consensus is for that to remain the same. We're not going to get an interest rate hike, but I think the difference with the Bank of England and the ECB today, all right, the ECB are at a lower interest rate, but numbers in the Eurozone aren't great. Numbers in the UK aren't great either, but core CPI remains elevated and wage growth remains elevated throughout the UK as well. Now, that's not really a reason that they could come out and talk about interest rate cuts. Markets currently pricing 100 basis points, or are pricing in 100 basis points worth of cuts for the Bank of England in the next year. But with inflation remaining elevated, coming down, but still remaining somewhat elevated, wage growth still remaining strong, it's probably not a situation where they want to talk about interest rate cuts. I reckon the Bank of England will probably push back on interest rate cuts and say it's too early to start talking about cuts into next year, which is a bit of a hawkish stance. I mean, I can't imagine they go and start saying, yeah, we're going to cut interest rates next year, or give us an outlook on when they're going to cut interest rates next year, just because they still have work to do in order to get inflation under control. And elevated wage growth, strong wage growth, is likely to keep that inflation somewhat supported, you would have to imagine. Where the Dovish shift comes from is if these members voting for a hike go and shift their rhetoric. If this goes to 0 for 9, for example, that would likely see sterling weaken. It puts paid to any thought of kind of the higher for longer mantra that they do have to keep up. On the balance of probabilities, I would say it's probably more likely you get sterling higher off the back of this, especially off the back of such a dovish Fed yesterday. I mean, they won't want the currency too high against the US dollar, I suppose, but I think it's a little bit too early for the Bank of England to start talking about interest rates. That would be a situation where you'd have to imagine sterling pops slightly higher. If those 3 members for voting for a hike do hold firm on that, then I'd say that probably does cause a bit of upside to sterling. But again, if those members voting for a hike, they are hawkish members of the MPC. If they start turning around and voting for it to be unchanged, and that goes 0 for 9, well, that is a situation that likely sees the sterling weaken. So there's 2 different scenarios there that could play out. Obviously, you have to wait till midday today to find out. With the ECB, they've got a little bit more of a troublesome time coming across hawkish. I think that there's pressure on Christine Lagarde to drop the higher for longer mantra. Markets are pricing in interest rate cuts as early as spring next year for the ECB. Economic growth not good, negative in the Eurozone. Industrial production the other day, not good from the Eurozone. Inflation is under control. There's a bunch of things. Economic data in the Eurozone isn't as good, hasn't been as good for a while. And I've said a lot of times on these videos, the ECB are probably closer to an interest rate cut than the rest of the central banks. The Fed have gone and changed those expectations yesterday. I think the only possible policy change from this is any sort of a change relating to the last of its bond buying scheme from the COVID-19 pandemic. The PEP program, maybe they adjust that slightly, so we'll keep an eye out for some we're going to keep an eye out for some commentary around that one way or the other. But what did the ECB say going forward? I think they have to drop the higher for longer mantra. Do they talk about interest rate cuts next year? Maybe they will feel a bit more comfortable about talking about interest rate cuts because of the Fed last night. So I'd expect on the balance of probabilities, I would expect euros to probably move lower off the back of the ECB today, and I think there's more potential for sterling to push higher. Therefore, do euro sterling shorts make sense? I think especially on a hawkish surprise if the Bank of England do not talk about interest rate hikes, or do not talk about interest rate cuts, and keep up the higher for longer mantra, which I think they probably might. People voting for a hike, keep up the 3 of them, keep voting for a hike. I think then that could cause sterling to push higher, and I think euro sterling shorts and cable longs are probably on the cards off the back of that. The ECB, you'd have to imagine they come across dovish. Christine Lagarde is under pressure to drop the higher for longer mantra. You'd have to imagine that she probably will, judging off the state of the economic data from the Eurozone not being great. Growth is flat. Labour market's not too bad, but inflation's under control. Growth is flat. Industrial production, manufacturing figures aren't great. So ECB. Euro dollar shorts, if off the back of a dovish ECB, probably doesn't make that much sense. I think you'd rather pair it against something else. On yields pushing lower, euro yen shorts would make sense. Euro sterling shorts would make sense if the Bank of England come out hawkish. So I think certainly with the Bank of England at 12 o'clock, I think Euro Sterling and cable should be in focus at midday. Come around to the ECB, I think again Euro Sterling if the BOE play ball, and I think Euro Yen would probably make sense as well from that sort of point of view. We'll then get the press conference from the ECB, no accompanying press conference with the Bank of England, but the press conference with the ECB at 1:45 today. She will get asked questions. What she says in relation to those questions is obviously another question. But that's kind of how I'm thinking going into the central bank announcements later on today. We'll have to wait and see how they play out. But good luck trying to trade them. Hopefully made a bit of cash last night, but good luck trying to trade them later on this afternoon. We'll update further after the releases themselves.